All right, welcome back to the channel. We're going to be talking about a crucial stock that I'm receiving tons of questions over. We recently rode the move up and now this stock is crashing, and I think you know what stock I'm talking about. FUBO TV absolutely getting crushed. I think the dump is getting a little bit brutal, but we need to look at key factors to why this is happening. And I'll let you know right now, FUBO TV is not a buy for me. Maybe after a month or two, but I could see this getting very ugly. Before we go any further, I need you to do one thing and one thing only. Hit that subscribe button below and hit the like as well. The support from this channel has been amazing. We are growing rapidly and I appreciate all the love and support, but I'm not gonna waste your time. We're gonna get right into the juicy content. Run it. So there's kind of a lot to cover with FUBO TV. So let's just jump headfirst into the content. The major reason FUBO TV is dumping at crazy speeds is because the new rating they just received from analysts, as you can see here. Now this is a huge drop in kind of what everyone thought that they would be worth, since their initial IPO was for $10. Now we're seeing that $10 range kind of vary for everyone, and that's kind of like what the going rate is. So I assume that everyone thought the new price target would be closer to what the price actually is now, if not higher. Spoiler alert, as you saw, it was way lower. The stock currently closed Christmas Eve at $41. Wow. This is pretty bad.
All right, so we're gonna have to get pretty physical right now. It's been a long time since I've gotten physical.
And we're not even close to the initial target. Do I think we dropped to $8? No, I don't. But there's real factors, and this isn't just hype on why this stock is going down. I think it's a dangerous stock for people to be buying right now. And I have a feeling on social media, this stock is going to be pumped out. So I really recommend that you pay attention. Okay, so I want to look at the bullish aspect of FUBO TV and why everyone was really pushing for them to be a success, including myself. Now, the idea of doing a streaming service for live sports, when combined with betting, something like DraftKings, so you could put them together, it would make it very simple and easy for people to bet while watching the game live. Totally a great idea. And the idea really formed behind this when FUBO TV actually acquired Balto. From an outside looking in, if you knew nothing about Balto, it seemed like a match made in heaven. You're like, finally, FUBO TV is pursuing this idea. But Balto was crap. Really no company, not even a website, and no real revenue ever brought in. This was red flag numero uno when you really start looking at the details. The next red flag, FUBO TV hasn't really gave anyone an answer on how they're going to become profitable. They're kind of riding on the fact that they're going to be a gambling service with a sports streaming service, which can't be possible at the moment. This leads us back to the analysts giving a $8 price target. I think that the $8 price target was extremely bearish and kind of overboard. Now 20, maybe below that, yes, if you want to really break down market cap and do the math there, but we're not going to. This isn't business calculus, so chill. And the most powerful statement he had in this reasoning behind $8 is when he said, without any revenue besides from subscriptions, at best, FUBO TV will be a zero gross margin company. That's pretty rough. So it's making people really take a step back and look. Now, is this some panic selling? Yes, but I think they're really going to get revalued here pretty soon. But I want to shed light on this one fact, is that they are growing substantially. They are killing it in the space compared to competitors. And for being that new stock, they're kind of doing great. Year over year, they're up 58% alone. However, they're just not profitable, which is kind of a problem. Similar to DoorDash, in my opinion. Dominating in the space, they need to be profitable. I think the next earnings report coming up will be very crucial for the stock. But let's get into the charts. Ain't that a pretty chart? Okay, so I'm gonna break it down in really short time frames so we can really see what's happening right now. We came down to our major support and we're actually just riding sideways. This alone is very bearish. It's going to continue dropping, which it did after hours. It's actually sitting right below that support. I actually don't think the stock bounces until we hit the major support, which is going to be the $29 to $28 range. And I think it's going to hit it very fast. And I think it's actually going to hit that target pretty fast. Ideally, in a perfect world, we're going to see a clean breakthrough, touch up, and then come all the way down. If you want to open puts, that retest of the 43.9 area is going to be your spot if you're feeling risky.
Feel lucky. Well, do you, punk?
If you're looking for some shorter term calls, which I will be doing, this $29 to $28 range is going to be a very good spot for a bounce, especially if we don't see any upward movement until then, which is kind of what I'm betting on. If we see straight sell-off pressure down there, I can almost guarantee a move up to $35 to $34 within 2 to 3 days of touching that bottom. So let's say the stock breaks down, comes and hits here. And let's say I would probably have some aggressive entries at this level. Let's say we enter about right here. Ultimately, what I want is a pretty quick move straight back to that $34, $35 range. Now, I know the squigglies can be a little bit sketchy, but trust me, I've done this before. Sometimes you just gotta risk it for the biscuit, And now time for my long-term investors. If you're looking to get back into FUBO and you sold above the $40 range, which probably would have been a smart move, the $18 to $19 range is going to be a very, very, very hard support. We've tested it both ways, on the bullish side and the bearish side, and that support has held for a long time. Now, this is the daily chart, so these candles are more respectable in a TA point of view. Rejected once. This was 3 times. 1 time. Rejected once and flipped. And if you go into the last time, it actually broke above, came back down, broke above, retested, then went up, which is the best move overall. This $18.8 to $19 range will be beautiful setups for long-term stock buys, if you believe that the company will in fact acquire some sort of gambling license or company like that. Ideally, I think working with DraftKings or FanDuel or something like that would be the best move, but who knows what they'll do. Honestly, guys, either way, I think FUBO TV is going to be a good company. In the short-term view of things, we have to be realistic and not be biased towards what we believe with the company. And all bad news aside, we have to look at the overall growth and what it says about the company. They're making a huge dent in this industry and kind of dominating. They're making huge acquisitions. Epix TV was their last one, and they're doing very well. So if I had to put my money on this stock and say, will they figure out a way to be profitable? Yes, I would. Best possible scenario is if they make a deal with something like DraftKings, FanDuel, Penn Gaming, something along those lines. I think that's the best route, but we'll see what they do. DraftKings and Caesars are doing a deal right now, and DraftKings is now working with the NFL directly. So I wouldn't put it past them to reach out for something like this. All right, guys, so that's going to wrap it up for the video. I hope you got something out of this. And if you did, or I don't really care if you didn't, hit the thumbs up and subscribe below. More content coming. We do daily live streams. I'm showing you exactly what trades I'm getting in and out of. And again, I love you guys. Thank you for the support. Namaste.